Hey, what's good? What's good, everybody? So we're back. We're back. This time around, we're talking about risk management. I'll try to give you guys my knowledge and my experience about risk management. And I don't really know what much I can say with these videos, guys. I'm just freestyling with these videos. I'm doing my best not to ramble on. That's one. Another one, I can't script, guys, because if I start scripting, I won't give you enough information. It's better if I just give you the information the way it comes from my head every day when I look at the markets, when I look at the charts, right? So it'll be very interesting to see what we can do today when we talk about the most important topic. Like this is the second most important actually after psychology, but this is one of the most important topics when it comes to your trading journey, and it's one of the reasons why I took years to end up having consistency. And by years I mean literally years, guys. It would be nice if some of you guys don't take 5 years or more than 5 years like some of us to finally be consistently profitable, because most of the traders that you guys see on social media, if you really track those trades that they place and the amount of risk that they take, those people are not consistently profitable. There's a difference between making profit and being consistently profitable, right? You need to be able to risk even 0.2% and be able to reach 10% just by risking that small amount, meaning you need to take a lot of positions to reach that amount. It shows your consistency when you can do something like that. But anyway, this is that FTMO account that we spoke about on the, if you have already watched the advanced candlestick analysis video, and it's the advanced candlestick analysis video, and I forgot the other one. What's the name of that video that I recorded yesterday? I probably forgot about it, but if you've watched other videos, I'm sure you've seen the FTMO account where we had this Euro USD trade. We had a Euro USD trade over the weekend. I placed it on Friday, but I didn't see that key level though. I didn't see that key level. The trade was somewhere up there. I forgot. Forgot. It didn't make that much profit, but there it is. There's the sign right there. There's the arrow. The trade was somewhere there. We entered it somewhere right there. Now let's go to the 15-minute time frame. Then you guys will see it properly. The problem with that trade that I placed, I forgot. That's where my risk management really failed, honestly. It failed. Yes, I did have a stop loss. If you watch the video, you'll see I had a stop loss, which is a huge W already. You can't forget placing a stop loss. You can forget placing a TP, but never forget placing a stop loss. A stop loss is, it's very important to always have a stop loss, guys. That's the first lesson that I'll give you, most of you guys, whether you're a pro, you're a guru. Never forget to place a stop loss. Because I remember in 2018, I don't know when North Korea fired, when they were testing nuclear weapons. I think they were testing a missile, right? No, they were testing missiles. They fired a missile that flew past Japan. I think it flew past Japan, obviously, but it dropped in the ocean. The way the market dropped that day, when I tell you guys, you need to use risk management. Don't think I'm joking. You need to always use risk management. I don't know if we can check it. Maybe we can check it somewhere here, but I don't think it's now visible. That drop was really visible at that point in time, and I remember it very clearly. That's when I learned a lesson that you should never place a trade without a stop loss. Doesn't matter what time frame you enter in. I place trades on the 3-minute time frame on US30, and on Nasdaq I place trade on the 1-minute time frame. Obviously, as you should know by now, it's top-down analysis. I analyze from the daily time frame, even though I do enter on the 1-minute and the 3-minute, but it's based off of analysis from the high time frames to increase the probabilities, right? So the core of most trading strategies is top-down analysis. Even ICT strategy, it's top-down analysis, the power of 3 from the daily time frame, in order to find out where the market is likely to expand. That's what it says, right? Where the market is likely to expand the next day or that current day. Then you go down to the lower time frame and start looking for those entries, those fair value gaps and stuff. So top-down analysis is a core thing. I'm gonna speak about it on another video, but this video is about risk management. I entered the trade here, but I missed the fair value gap entry somewhere there. Oh, I feel like I'm a little bit gassed. Let me slow down a little bit. I think I'm talking a little too fast. Let me slow down. I think I missed the fair value gap entry over. I'm slowing down, guys. I'm gonna speak a little bit slower, so I hope you guys will be patient, because the video now will be very long. So I'm trying to find something. I've never used MetaTrader to analyze, so I don't know where these things are found. Well, there's the rectangle right there. Where was the fair value gap again? The fair value gap was over there, and it broke a previous low right there. There was an imbalance right there, and it broke this low right here. It broke that low because we're moving up, low, high, low, high, low, high, low, and high, low. We broke that. We created an imbalance right there, Then we came back to test that imbalance, and you could have entered anywhere in these zones right there. Even if you entered here, your stop loss was going to be somewhere there at 15 pips, or if you wanted, you could have used a wide stop loss at 20 pips. You could have made 60 pips. That's a 1:3 risk to reward ratio, or should I say a 3 risk to reward ratio, a 3 RRR. That's basically what they say. That's what we could have made if we entered up there, but I was going to fetch my mother somewhere, so I didn't really catch that trade. So I ended up entering a little bit late right there, and I didn't put the TP was at like, it was a 1:2. It was a 1:2. I think I used a 20 pips stop loss. I was supposed to exit somewhere there. Yeah, I was supposed to exit right there at 40 pips because my stop loss was at 20 pips. It was around here, around 20 pips. But it is what it is. I just wanted to show you guys an update on this trade. I exited right here. As you can see the line right here. I exited the trade there. It was just only 26 pounds only. So it wasn't a lot. It was 0.6%, which is quite small. And here's the FTMO account right here. This is the account that we'll be using, that I'll be documenting. I was using this account to study ICT concepts this year. I was using it to study ICT concepts because I don't back test, guys. I just don't like back testing. I like forward testing. And the reason why I used an FTMO account is because it's a risk management thing, guys. I actually prefer having an account where I can risk 0.5% and 1% than using my own capital, my own legal capital, where I'm gonna risk 5% or 10% each trade, right? I just don't like that. I like good psychology, growing the account slowly. Besides growing the account slowly, growing the account with proper risk management, right? Managing the risk properly to show you the power of risk management. Let me show you guys the power of risk management. Can you see this account, right? This account right now is at 3.2%. Right, this account is at 3.2%. If I show you guys, whilst I was testing out these ICT concepts, how many losses this account took, it's at an 88% consistency score right now. What's a consistency score? The value calculates the consistency of your trading based on the results of each trading day. A high value indicates more consistent trading. Oh, so it's your consistency. 88%. It's been ranging above 80% with this account since I stopped testing out and started really applying all the knowledge properly and started deciding, no, let me just grow this account and pass the challenge. So right now, excuse me for that, right now we are at 3.2%, and it has taken, how many trades? Is this the number of trades? It has taken 32 trades, right? 32 trades. No, 32 trading days. In 32 trading days, how many trades has this thing taken? I don't know how many trades. Let me check. 21 lots. I'm sure you guys can calculate. There have been a lot of losses, bro. It's really quite scary. How many losses has it been? I don't even know how many losses has this account taken, but they've been a lot. They've been probably more losses than wins. Definitely more losses than wins. But it's just that I know how to use good risk management. Let's see. Where is it? Oh my god, I need to learn how to read these things, these FTMO things, these charts and stuff. As you can see, I was still testing, guys. You guys know I don't trade gold, I don't trade USD but you can see there's USD there's gold, there are a lot of things over here. There's the S&P 500. I was still learning the ICT concepts and trying to see which assets work best for me when I'm using my strategy mixed with those new ICT concepts. You can see minus 47, minus 36, minus 41, minus 17, minus 50, minus 3. I count those ones. Minus 44. What are the other losses? Minus 50. Minus 50 is the one from a few days ago with US30. Minus 50. Let's see, where are the other losses? Let's go to the next page and check them. I want to show you guys just how many losses this account has taken. This account has taken a lot of losses. I think I'm gonna still talk about this even when I'm talking when I'm on the introduction video of this. Minus 49, minus 47, minus 32, minus 40, minus 48. As you can see, the losses are below 0.5%. Minus 47, minus 48. I was never losing more than 0.5%. You see the thing of keeping your losses small. You need to risk your losses in a very, before taking every trade, I plan the loss that I'm willing to take. With every opportunity that I take, I plan the loss that I'm willing to take. Whether my stop loss is 15 pips or my stop loss is 20 pips or my stop loss is 5 pips, I will always make sure my risk is at 0.5%, or if you want to go big, maybe if I'm risking 1%, I'm going to do that with the next phase of this challenge in this account, the verification phase. I'm going to risk 1%, but for this specific one, we're risking 0.5%. As you can see, the losses don't go above 0.5%, 0.2, 0.2, but the wins go above 1%, the big ones, like the ones where like they're really winning. But look at the overall of the channel, of the, now I'm saying channel. Look at the overall of the, as you can see, because of the number of losses, the risk to reward ratio hasn't risen. It's still at 2 RRR. It's still at 2 RRR right now. It hasn't risen. So it's only this month where it's only late November when I decided, no, let's start growing this account. That's why right now it's at 3.2%, but we'll grow it slowly. We're risking only 0.5% on this account, and this account has taken a maximum loss of 1.76%. Of all the losses that you have seen, all of them that you have seen, the maximum loss this account has taken, it's only 1.76% because of my consistency, the consistency in my risk management, the consistency in my rewards, and the consistency in my risk. Let me put it that way. If you can see, the maximum loss that I've taken in a day, it's only 1%. It's that time when I was testing out gold, because gold is a beast, bro. It is profitable, and the good thing about gold is the fact that it's a safe haven, and it's where most investors go when the markets are in turmoil, right? It's where they go when the markets are in turmoil. So it's a good asset to trade long term. But I don't like gold. I don't like the risk to reward ratio with my strategy. I don't like gold. I don't like a 1:2, 1:3 risk to reward ratio. I prefer assets where I can get a 1:5, 1:6, 1:7, like Euro USD, Nasdaq, US30. But I'll say Euro USD first, then followed by US30, then followed by GBP USD, and then it's the Nasdaq as well. Those are the ones where they give me personally a good risk to reward ratio. So that's basically the key to good risk management right there. There's a 2% trade there, but you need to know how to manage your risk properly, guys. Doesn't matter how small or how big your stop loss is, you need to know how to manage your risk. The first thing you should think about before every single trade, before taking a trade, the first thing that must come to your mind is the risk that you're willing to take, the amount of loss that you're willing to take with that trade. You must already know that, okay, with this trade that I can see right now that I'm about to enter, I'm only willing to lose 1%. That's what you should already know. Oh, it seems like Euro USD is gonna be a buy. It's gonna be a buy maybe in the coming first few months of the year. But it's only judging from the the structure of the monthly time frame right here. It's probably gonna be a buy. This is top down analysis, but I rarely touch the monthly time frame. I rarely touch it. Maybe we can touch it at the end of the month, but usually also I skip the weekly time frame. I don't touch it. I mostly focus on the daily time frame with my top down analysis. I mostly focus on the daily and what's happening on the daily candles, but I've seen what the monthly is doing, and the reason why we exited this trade. Oh yeah, now I remember the video. It's the video on the investor psychological levels. The reason why we closed the Euro USD trade is because we noticed that Euro USD is hovering above an investor psychological level. It's hovering above an investor psychological level. I think it's the 1.05 level. Yeah, it is. It's the 1.05 level right there. It's a very strong key level, so we can see even the way price rejected on Friday that, okay, this level might have some liquidity there. There might be some liquidity in that level. There might be some sell limits, there might be some buy stops or whatever it might be, but there's some interest there, and there's a huge fair value gap that formed. Why am I talking about fair value gaps? I might end up confusing people now. We're going to talk about fair value gaps later, but you can see that it feels an imbalance when it reaches this level, right? It feels an imbalance. It has touched this level. So right now, what we can do with Euro USD is to see where. Here's a good example right now. There is no trade. For me personally, there is no trade. There's no visible high probability trade. There are trades. People can take a risk. But for me, using my strategy, there's no high probability trade on EU right now. And the best scenario that can happen with EU, can you see what happened right here? Maybe let's say we get a strong push upwards like that, showing us that buyers have stepped into the market. Or if we get a strong drop downwards, then we'll know the market is most likely to tank a few levels lower, but the best case scenario is probably the market pushing up with one candle or with two candles. Maybe it pushes up one, two, or pushes up only once. Then we can start considering entering some buys going upwards. But if it pushes down, then I don't know, maybe you can look for sales, or you can just watch it and see what happens later. You can just watch it, but I'll probably look for sales if it still pushes down past this investor psychological level, because it's a floor. If the floor is broken, then it's probably gonna go further looking for a new floor or looking for a new zone of liquidity, right? Which is probably gonna be at this 1.06 level down there, or even further at this 1.062 level. But we're gonna see, this is not an analysis video, this is a risk management video. So the whole point, or the whole beauty of risk management, is that no matter how many losses you take, you will still see consistency and growth if you risk properly, and you risk a small risk or even a good risk, like 1%, 0.5%, 0.25%, those kind of numbers. If you risk that kind of amount in your capital, you can properly manage your risk. And once you have contained the risk, or once you have contained the blowback from losing trades, then you can start focusing on maximizing those gains, and maximizing those gains and minimizing the losses even more, like knowing when to go to break even, knowing when to get out of a trade, like the way I exited Euro USD, because the analysis was telling me that no, this thing has a higher probability of reversing than it has of actually continuing with the trend. So that's why I just thought, okay, let's exit and see what actually happens next. And then there was also Euro USD. No, there was also Nasdaq. I wonder what's happening with Nasdaq. Nasdaq on Friday, the Friday close was telling us that there's a probability that it's gonna be a little bit bullish for some time. But let's see. Let's see what it's doing. Is it already retracing right now? Hopefully it is. It's taking too long. Risk management. I want to also speak about another important thing about risk management. But let's close this thing. It's now causing my computer to just slow down, bro. I don't think we still need to have this FTMO open, do we? Let's just leave it there. But anyway, another important thing about risk management that I can tell all of you guys is, don't use a tight stop loss. Don't use a tight stop loss. Choose your assets, choose your instruments, choose your pairs according to the risk to reward ratio that best suits you, whilst also having a stop loss that is not tight. By a stop loss that is tight, I mean a stop loss that is too close, that can easily be hit, right? That's where mostly your entry strategy starts coming in. Is it? I think it is. Yeah, Nasdaq is retracing. It is retracing. And we want to speak about the sessions as well, because I think Nasdaq is a good example of sessions where most of the movement will start happening late London session, moving towards the New York session, and then the New York session is gonna. That's when the bias of the market will start moving in the direction of the market. That's when it will really explode during the New York session. That's why we mostly trade during the New York session, or before, like an hour before the New York open. That's when I usually start opening the Nasdaq and US30 an hour before the New York open. Then once I see, okay, the market is retracing, or the market is still pushing up, when the New York session starts, maybe in the morning it's gonna retrace, and then in the evening it starts going up, so we get entries for those trades. But we're gonna speak about sessions on another video. I'm gonna create another video for sessions and stuff like that. But basically what I mean by don't use a tight stop loss, when it comes to an asset like Nasdaq, and with Nasdaq, what I've noticed, when you use a stop loss that ranges between 70 pips and 100 pips, when you're swing trading. By swing trading, I mean when you're entering on the time frames, like the 1 hour and the 4 hour time frame, when your trades are based off those time frames, when your trades are based off the daily time frame movement, like you remember what we spoke about on the advanced candlestick analysis. When it's based on that, then you enter on the 1 hour or even the 30-minute, but it's still based on the high time frame, and you swing from one point to another point, or you swing from here to there, right? You should use a stop loss that is wide enough but also still small enough to fulfill a good risk to reward ratio. A good risk to reward ratio starts from 1:2, 1:2 going to 1:3, 1:4. With Nasdaq, I believe it's around 70 points, right? right? It's right around 70 points. 70 points, it ranges between 70 to 100, because US30 ranges between 100 points and 150 points. Gold ranges between anywhere between 100 to 200 points, but gold really goes close to 200 points. Gold is really close to 200, because that thing is really volatile. Gold is very volatile. As you can see with Nasdaq right here, if you enter at the market open, or if you entered anywhere in that zone, you would have used the 100 pip stop loss. You would have survived this New York session blowback. Because see, usually this accumulation phase, it happens during the New York session. It happens during the New York session. The reason why I know is because I know, guys. I know once you've analyzed something for a long period of time, as you can see, this one has a 6.7 RRR, and it's how many days? It's 7 to 8 days. So it's only 1 week and some days. So a trade didn't last that long. That's swing trading, right? But with me, I wouldn't have entered on the 4 hour, the 1 hour. I probably would have entered on the 1 minute time frame. Because let's check it out. Let's see what happened on. It's not gonna reach there. It's not gonna reach there. Probably only the 3 minute can reach there. But let's check recently. Let's check what happened recently during the New York session on the 1 minute time frame. I want to see if there was some structure that happened there. But I'm sure you guys now understand risk management and stuff. I'm sure you now understand it. We don't need to speak any further about it. And another thing that I can talk about is to say the importance of risk management. It's also the fact that risk management ties in very, very closely with psychology as well. It's almost like they're twins. They go together. Psychology and risk management go together. If your risk management is weak, it's going to affect your psychology in trading, because you're going to take a loss and the loss is 2%, and then you'll be afraid to take the next trade. I know those feelings. You'll be afraid to take the next trade because you'll be like, oh, what if I lose another 1%? Oh, look at my account. I'm now at minus 2%. This account, let me show you guys this matrix right here. This account, this FTMO account, whilst I was experimenting all these things, it reached as low as 3%. It went to minus 3%. It went to minus 3%, but it came back up. It came back up. Now it's at plus 3%. It went to minus 3%. Whilst I was experimenting and trying those ICT concepts, before I started to understand them, it went to minus 3%. So you need to have a really strong psychology. If you can't handle these kind of blowbacks, and if you're using a huge risk, that account wasn't going to be at minus 3. It was going to reach minus 8, minus 7%. How do you recover from minus 7, minus 8%? You can, but it's not easy. It's really not easy. You can't easily recover from such huge drop, such huge drawdown. You can't easily recover from that. So let's see, the market opened at 4:30. Was it 4:30 or 3:30? It's 4:30. No way. 3:30. So we're still opening at 3:30, because I can see the volatility on Nasdaq was at 3:30 right there. 8th December. Or was it 3:30? As you remember what I told you guys, it happened. These huge accumulations, they usually happen during the New York Open. As you can see right now, during the New York Open right here on the 8th of December, there was massive. Yeah, I don't even think this is the New York Open. I think news came out. Maybe it's FTMO. I think maybe it's NFP. I think this was probably NFP. Let's check 4:30. What happened at 4:30? Yeah, 4:30 had the spike upwards. This was the New York Open right here. The New York Open had a huge spike upwards to confirm that the bias is still bullish right there. We're still going upwards. So this right here, this drop, this huge, this massive drop right here was during NFP. But look at what this drop did. This is what we call a Judas swing as well. This was probably a Judas swing. If we check right that side, there's probably a key level there. There's probably a key level. I don't even need to check it, bro. So that's a huge fake out. The Judas swing, it came back, it created an imbalance right here. You're gonna learn these things in the video when I talk about entries, right? So be patient with that. The video where I speak about entries, you're gonna learn these Judas swings, fair value gaps. It created a fair value gap right there. This is ICT concepts. When I want to enter on any time frame below the 15-minute time frame, I use the ICT concepts that I know, right? I use the ICT concepts that are useful to me, right? When I want to enter on these low time frames, like the 1 minute, the 3 minute time frame, the risk is reduced, and you have confidence when you're entering them. It created an imbalance. After creating an imbalance, it came back, it filled that fair value gap. You would have entered somewhere there. That's the first entry, but there's probably another entry that's during the New York session, but we're gonna check it out. You have used a 50 point stop loss, just nice 50 points down there, and you have made a good risk to reward ratio. Let's check. Actually, I wanted to keep checking the risk to reward ratio, but let me not do that because I'm now pretending everyone who's watching this video knows how to trade. So it's probably 1:3. It has to be a 1:3. It has to. I think it is. Well, it is a 1:3. 1:3 risk to reward ratio right there. 150 points. But if you held it, you're still gonna continue to get some profit right there with this movement. But let's see over. There's another imbalance right there. There's another imbalance there. Then it came back, it filled that imbalance there. You could have entered there as well. Could have entered there. I'm too lazy to place it, but I'm sure you guys get the gist of the story. Create an imbalance, it filled it. You could have entered there, another 50 pips stop loss. You would have then you would have exited up there. As you can see, it still went up and up and up and up. So you'd have got a good risk to reward ratio if you held the trade. You'd have got a good risk to reward ratio. But let's go back to the high time frame. This video is not about entries. It's not about entries. So other entries, the 15-minute time frame, 5-minute time frame, using candlesticks. When I enter on the 15-minute time frame, 5-minute time frame, I use candlesticks. The way that I use candlesticks to analyze, I also use candlesticks to place those entries, like those momentum candles, those candles with huge tails, those big rejections, those hammer candles, the shooting star candles. I don't like the names, but if you watch the video on advanced candlesticks analysis, I told you guys the video where you need to learn how to read individual candles. What is that candle telling you? Price ran upwards, but the buyers failed to breach this region right here. What happened? It was shot back down, then it closed right there, which means seller has strength, then you sell it. Things like that, basically. Right? Things like that. You need to understand to read individual candles. You don't need a lot of things. You don't need indicators and so on. But once you start using the ICT way of entering trades as well, that's another level, bro. That's next level right there. That's next level. I have to give the guy props where props are due. So remember those things, guys. Don't use tight stop losses. That's one. Don't try to be a superhero. Don't try to do sniper entries. Don't try to do those things. Don't try to impress people with entries. It's not about impressing with entries. It's about managing risk. You need to manage risk. That's another one. The first thing you think about before entering any trade is your risk. How much are you willing to risk? How much are you willing to lose with that trade, right? Your risk to reward ratio might be good. Your consistency might be high, but as Mark Douglas says, you don't know which trade you're gonna lose. You don't know how, in what sequence of trade your losses will come. You don't know the sequence of the losses in, maybe let's say in 10 trades. You don't know how those losses will come within that sequence of 10 trades, right? You don't know how those losses will come. You don't know if you lose in the second trade. You don't know if the third trade is the one that's going to lose. You don't know if maybe the first trade is the one that's going to lose, or the seventh trade is the one that's going to lose. You don't know those things. You just know that after 10 trades, you will be profitable. For example, with what I showed you with my FTMO account, even though I was experimenting and I was testing a lot of things, I still knew that once I start becoming serious, long term, it's gonna grow. I knew that. That's why you can see now it's growing, right? Or now it has grown. It's now past 3%. And since I'm risking 0.5%, how many trades do I have to lose? 0.5, 1, 1.5, 2, 2.5, 3. Then 3 point something. So I need to lose 6 to 7 trades in a row in order to go back to zero, to break even. Imagine that I need to lose 6 to 7 trades to go back to break even. So when I place every trade, I manage my risk right like that. I keep my risk constant. I keep my percentage constant. Don't change your percentages. Don't move your percentages around. If you are risking 1%, stick to 1%. If you are risking 2%, stick to 2%. If you are risking 0.5%, stick to that 0.5% of your capital. By 0.5%, we mean 0.5% of the money that you have. If you have 10,000 pounds or $10,000, you need to risk 0.5% of that. Then you need to only risk about 50 pounds or so. 50 pounds. £50. Your losses must not go far beyond £50. There might be slippage. Maybe you might lose 5.5% or 6%, but you might lose 0.6% or 0.7%, or should I say £60 or £70, maybe if there's massive slippage. But keep your risk constant, right? You need to keep it constant. I don't want to make this video too long. You guys must learn to keep your risk constant in terms of the percentages. The only thing that changes is your stop loss. The stop loss will forever be changing. You won't use the same stop loss all the time. But in the beginning, if you're starting with assets like Nasdaq or the US30, use those safe stop losses like 100 points, 150 points with US30, 200 points or 150 points with gold. If you want to trade gold, even though I do not like gold at all, I don't like gold, it's not my thing, right? But if I traded gold, I was still gonna be consistent. But I know I was gonna take more losses with gold than I would take maybe if I was trading Euro USD or if I was trading Nasdaq. With me, my trading is mostly risk orientated, right? I minimize the risk, and then I focus on maximizing the gains long term, right? That's how I trade specifically. So that's how we're gonna do with this. I think now you guys understand risk management. I don't think I need to speak any further about this thing, guys. I don't think I need to speak any further. I'm sure you guys now understand. Switch to a percentage based risk, right? Risk using percentages. Calculate your amount in percentages and stick to that percentage or that percentile or whatever it's called. Risk that percentage only. Don't stray away from it. Play around with the stop losses. Obviously, sometimes your stop loss will be 50 pips, sometimes it's 20 pips. Depends on the time frame. It depends on the strategy that you're using for your entries, right? Just look at this movement right here from far with Nasdaq. Look at how wild this looks. This looks wild if you just look at it from a far away perspective. It looks wild, but despite it being this wild, even if this was a losing phase for you, you'll only lose 1.5%. Let's say if you lose 3 trades in a row. If you lose 6 trades in a row, you'll only be 3% down. And as you can see from this FTMO account, if you're 3% down, you can still come back up. It's easy. Right now it's 3.2% up. So you can recover from being 4% down if your risk is good and tight. You need to keep your risk tight and good. As you can see with this thing, guys, you can see the maximum loss that has been recorded hasn't even passed 2%. It hasn't even reached 2%. So you need to know how to use your risk management, especially if you're going to be dealing with things like prop firms. And the reason why I chose FTMO is because it's the oldest one of those that I know, and it's the only one that I can trust. Obviously, you can't trust any broker, you can't trust any prop firm, you can't trust anyone, guys. Anything can happen. This is life. A broker, you can have a broker that you trust, all of a sudden it closes, or all of a sudden it gets chased. There's some company chases after it, or some regulatory board chases after it, right? Things can happen, or the owner starts eating the money. So you can't trust anyone. But I always go with the safest bet, right? I always go with the safest bet. We are in a business of risking. I calculate my risk. I was like with FTMO, if I have FTMO accounts, then things are a lot easier for me. So that's the client area. Still ongoing. The end is unlimited. This is the unlimited version. It's the unlimited version. It's the FTMO challenge. I still need to open a new trial account so I can do more experimenting. Look at how many trial accounts I've opened, guys. These are the number of trial accounts I've opened, testing out my stop losses, testing out the risk management. But the one I was using to test out, to build a strategy, to build my strategy properly, is the main FTMO challenge. That's the one that I was using, the main FTMO challenge. Not the main one, this one. This is the one that I was using to test out. The one that you guys are seeing right now on your screen. And that's the consistency score right there, 88%. And when it comes to FTMO challenges, I've failed one before. I think it was last year or 2 years ago. I don't remember. I have failed one before. I was done with that one, guys. I didn't do enough testing when it comes to risk management. And then there was a trade that I placed with gold. I placed a gold trade, and the risk was at around 5%. No, not 5%. It was huge, bro. The risk was close to 10%, 5%. Bro, that was massive. The drawdown, seeing that those numbers, seeing that drawdown was crazy. After that, the account didn't recover. It was impossible for the account to recover after that. So anyway, that's it for this specific trade, guys. That's it for this specific video. That's what I mean. Look at the number of losses right here. Just look at the number of losses, but see the account is consistently growing. After all those trades, it's still consistently growing. I was doing a lot of experimenting, but it's really quite crazy. There's even Euro JPY. I don't even trade Euro JPY. I've never even been serious about trading Euro JPY. But anyway, that's it for this specific video. This is the risk management video. Let me just also talk about psychology as well on another video. So let's just get to the psychology video. And I hope you guys actually understand. I hope you guys understood the video about candlestick analysis, because the way that I analyze candles is quite simple, it's quite straightforward, but it might seem complicated at the when you're looking at it from the surface. But anyway, that's it for this specific video. So you guys should stay tuned for, you guys should check out the next video, and I'll be documenting the FTMO journey, so also be on the lookout for that.